It's 6 o'clock in London, it's 1 p.m. in New York, 3 a.m. in Sydney, 1 a.m. in Hong Kong, 10 a.m. in San Francisco, and 10:30 at night in Mumbai. Greetings, good morning, good afternoon, and good evening, depending on where you are in the world. My name is Patrick L. Young. The IPO-VID Livestream, Series 19, Episode 1 starts here, and welcome to Episode 109. Apologies, ladies and gentlemen, due to various logistical issues, not the least of which has been the fact I wasn't very well for a few days. We are recording this episode, so do bear with us. Don't rush to ask questions immediately, because I know Chris Sturgess, our guest today, is the sort of guy who wants and demands all sorts of interesting questions. He's such a raconteur about emerging markets the world over. But let's talk about a few things that have been happening this week, and actually several of them have an emerging markets flavor. The Ethiopian Stock Exchange, they're on a roadshow. They're looking to raise $750 million US for their new stock exchange. The government is going to put in $250 million, and that's going to give it insta-unicorn status. Now, hold on a second here, ladies and gentlemen. I mean, South Africa has, 60 to 100 million people, 4 times the size of the economy. And right now, the Johannesburg Stock Exchange is worth just around $400 million. Call it $500 million. I bet with a takeover premium, you will walk out with ownership of that exchange instantly. Kenya has half the population of Ethiopia, but a higher GDP at about $110 billion versus about $100 billion. And yet the Nairobi Stock Exchange is listed and worth $12 million. The current population of Nigeria is over 220 million people. GDP is around 440 million, which therefore puts it again somewhere above the level of, say the likes of South Africa or something like that. It's on an equivalent size. Its exchange recently IPO'd. It's worth $111 million US. Quite how we're going to extrapolate that billion-dollar valuation in an Ethiopian exchange is, well, simply open to question. Meanwhile, at the Hong Kong Exchange, the great leap forward, ladies and gentlemen, after all of that wondrous technology for Connect North and South, etc., going on in recent weeks. Fabulous news. The Hong Kong Exchange is hoping to soon get rid of the fax machine within its daily operations. Over in Brazil, Brazil's President Lula da Silva, he's proposing a South American currency to rival the US dollar. Well, isn't that just the vogue these days? Block thingies, crypto whatsits, and alternatives to the US dollar. I suppose it's fairly inevitable given Lula's recent maneuvers in Russia and China. But the problem is, I mean, hold on. We're talking about South America here. One of the issues of a currency surely is to be a store of value. Brazil has had 8 different currencies since the Second World War alone. The Cruzado famously had a point and figure chart that never actually had any times for any points. It was just a load of zeros all the way through the floor over many pages in the old-fashioned charting books. The Argentine peso doesn't look much more healthy. And in fact, when you wake up in the morning, does anybody think that the answer to the question is, I must just buy some South American currency to sleep better at night? The media may be having a field day prophesying the decline of the dollar, but I'm not entirely convinced. Anyway, on to our guest today, Christopher Sturgess. The topic is the AFM, that's the Association of Futures Markets, Africa and Commodities. Chris Sturgess brings a background across Africa during what has been a tumultuous quarter century for the commodities markets of the continent. He's a former chairman of the AFM, and Chris is passionate about developing and adding value to markets. He's over 25 years commodity markets experience, having begun with SAFEX, the South African Futures Exchange, nowadays rolled into the Johannesburg Stock Exchange, where a small team revolutionized South African commodity trading. And indeed, what a small team and a brilliant team it was. Until early 2018, Chris was chairman of the Association of Futures Markets, a position he'd held for 5 years. More recently, he's concentrated on consulting services on the African continent, working with various stakeholders in Malawi, Zambia, Kenya, Cote d'Ivoire, Togo and Nigeria. He's also been engaged with the World Bank and their various carbon funds. Chris, welcome to the show. Where in the world are you today?
Thank you so much, Patrick. Yeah, what a privilege. Certainly appreciate the opportunity to chat with you today. Sorry that it couldn't be face to face, but I'm glad to see that you're on the mend and recovering. So yeah, where do you find me today? In Budapest. Just arrived ahead of the conference that starts this evening. So yeah, an exciting opportunity. Returning to Budapest, we were last back here in 2012. So an opportunity again, just to meet up with members, previous members, and hopefully make some new friends.
Wonderful to hear all together, Chris. Yes, I'm very, very sorry. My keynote speech is going to be delivered by video. Alas, I cannot make it due to illness last week, which just knocked out my logistics. To be frank, I wasn't really fit to travel until today anyway, when we're recording this. But look, what an interesting career. What an incredible time to be in markets. How did you get into the commodities exchange business?
Yeah, I think I was a young man, much younger than I am now, and had an opportunity to start out. You know Rod Gravelet Blondin very well. When the South African markets were really just deregulating, so the SAFEX was up and running. It had really been going for about a year or so, and I came on board to really help the team just roll out the adoption of using futures by farmers and millers. And so yeah, it's been really a fantastic opportunity working with the South African market players to get to build that market to where it is today. Lots of fun stories around that journey of how you convince farmers how to use these instruments and to use them responsibly and not become really great speculators. But that has been a journey that certainly I look back and has got lots of good memories.
And I mean, the whole basis behind the South African exchange, the SAFEX, the South African Futures Exchange, it was really the commodities were built around a massive deregulation because essentially the government had run out of money, not to put too fine a point on it. And I mean, that caused an incredible upheaval in originally it was in the grain markets, if I remember correctly.
Yeah. So all the agricultural markets from bananas to grains to anything was really deregulated, where except for the sugar sector, everything else was willing buyer, willing seller, set the price. So yeah, that upheaval, as you mentioned, was really chaos for the market, trying to find out where is fair value. It was very simple in the past, where the government had set the price, and that was the only price that you were worried about. So it all depended on the politician and where they felt like pricing the product for that year. I think, but yeah, so in that chaos was an opportunity of really developing a marketplace with a group of members who have journeyed that and built up great businesses where they have memberships to the exchange, where they obviously have been able to also bring clients on board. And part of that old journey was we went electronic from day one and have continued to evolve on the electronic trading side of things.
Yes, I mean, quite incredible. You were born essentially as an electronic trading market, as I recall. There was a very, very brief flirtation with a floor, if my memory serves me correctly.
Yes, so your memory is brilliant. We did, when SAFEX financial market was originally established about 5 years earlier, they did build a trading floor close to the Johannesburg Stock Exchange trading floor, but no one wanted to really go downtown Joburg to do that trading. So SAFEX, which was then really just a financial derivatives market, quickly evolved and moved to electronic trading.
Yeah, I remember so many great stories about those pioneering years. Also the fact that, I mean, as you say, it was such a small team, if I remember correctly. The whole exchange and clearinghouse across commodities, financials, and indeed equity derivatives was all employing only something like 35, 36 people to run the whole business, which was stunning.
And I think, if you look back, yeah, that was everyone to the cleaning folk who kept the building neat and tidy. So really, it was a core team of about 15 to 20 folk. On the commodity side, we were 4 and moved to 5 individuals ultimately. But I think that also, in looking back, helped build a business that was manageable on the cost base. And so we could really just, perhaps, some folk would say, yeah, let's start with significant bigger teams to get the reach. But I think what we built was significant relationships with market players, because it was really a select team that was running there. Obviously, we were fortunate that we leveraged off the role of the member firms. So those traders and the clearing banks were all out there really trying to build the same kind of ecosystem.
Yeah, and I mean, very impressive, the reach of SAFEX as well. I mean, obviously the commodity business, I know, was very much more within South Africa, but as I recall, I mean, South African bond trading stretching a lot to London. I mean, 25 or 50% of the futures in the interest rate complex were running out of London at that time. And you mentioned the cleaner. I always remember the great anecdote, because it became one of those things to remember on your risk list for technology at sort of page 1, which was clearly mark the plug that runs the servers of your exchange, because the poor cleaner, as I seem to recall, wandered in one day, unknowingly unplugged whatever was there and started vacuuming, at which point in time the entire SAFEX ground to a halt, much shouting and screaming and suing. One of those unfortunate moments in the history of markets that we've all since learned.
Yeah, yeah, I think even similar stories with cleaners going onto trading desks and also hitting the enter key on the keyboard without any real controls in the very early days, taking out some of the depth windows. But these are, I think, when you're building a market and you're so familiar with the market participants, there's ways to kind of resolve that. The markets now are very, very different. Which is good. It's how our markets should evolve. A lot more structures, and with the regulation that's in place, it's certainly it's clear how you would resolve those type of instances.
Yes, it's been a huge change over time. So, I mean, SAFEX ends up being rolled into the JSE. Johannesburg Stock Exchange becomes the uber monopoly player. It buys the bond exchange, etc., etc. And then you moved on to Pastors New and into the world of consulting. So what happened there?
Yeah, so I think how I kind of saw things as after 20 years at the exchange in the commodity side, it really and building another great team that was really had stepped up. I think my time as in that was good to hand over. So certainly was very fortunate to hand over to a competent team that took over in-house, and that same team is still certainly very much running operations. And what that provided me was more an opportunity to go into consulting, really tackling particular situations or scenarios in various countries where there's an opportunity to look at how markets could be redesigned to make them more efficient. But at the same time, my risk appetite for the tourism sector was there, and I moved into operating some tourism businesses. So yeah, it's a balance. Did I know that COVID was about to strike? Perhaps I would have held off a bit longer, but certainly always very mindful of the risks that we're in and was part of the journey.
Yes, I mean, a very interesting journey all around. Obviously, I mean, the beauty of South Africa, quite magnificent. So tell us a little bit about your tourism ventures, and then we'll get back to markets.
Patrick. So yeah, look, as you said, South Africa really has phenomenal sights to see, and so we moved down to the Garden Route in South Africa. Anyone watching and really looking for a great value for money destination, South Africa, with the recent currency issues that we've had, is really affordable holiday. And so yeah, we bought an establishment there that is close to Plettenberg Bay, really in the gem of the Garden Route. So a great spot for a holiday. Works very well for anyone flying into Cape Town and wanting to fly out from Port Elizabeth, and really just having a great 2-week stay. Thanks for that opportunity to plug a bit of that.
Very happy to add to it. Some stage we should really do the Airbnbs of the exchange industry. I can hear Marianne in my ear talking to me already about the excitement of that possibility for one of her little featurettes on social media in the near future. So you've been consulting. I mean, you've been around Africa. It's been an incredible 25 years, I mean, for exchanges as a whole, but particularly for Africa.
Yeah, I think, again, if you look at the production capabilities of the continent for, let's say, staple foods of grain, like grains, is phenomenal. For some time, the JSE had been working very closely with Zambia, where the if you look at the arable land, rainfall, everything is just perfect for increasing production of grains. And so that journey, and if you look at other African countries, the potential is certainly there. It's just, and often, it starts with just consistent government policy. I think that's where that framework has really made it difficult for a number of, particularly for the private sector, to go in and invest and start to build that ecosystem out there. But I think, I've had the privilege of working with Zames in Zambia, which is still in its days of just trying to get its feet up and running and being able to provide a platform for better price discovery. But I think also, at one stage in the past, there was many of these commodity exchanges popping up and saying, this is the solution for Africa and many other countries. But I think, the real benefit or value add that comes from a pure spot exchange is really difficult. If I look back at SAFEX, we were very fortunate. Being a derivative market, we were very clear on what our value proposition was for the market players. Whereas if you're really just trying to start a general spot exchange business, it is tough trying to do and prove to the market players that there is a real value add. Because in many instances, in those spot markets, the buyers, there's a handful of those, everyone knows who they are, and the producers are out there. And when the buyers are interested, they know to put out a price, and that's it. So a pure spot market really doesn't add much value in that ecosystem. But if some of the other continents working with Kenya, I think also very exciting when they finally got their derivative operations over the line and up and running. I think their journey has probably been a bit frustrating, where they'd hoped that their derivative business would have scaled a lot quicker. But sometimes, it is also just bringing the regulator on that same journey and making sure they adopt the new policies and support a derivative exchange is not always that quick and easy. But I really do hope that Kenya especially will be able to offer and expand their derivative products that they've got on the shelves at the moment.
Yes, what an interesting journey. And of course, as you say, it's always very difficult educating regulators, bringing the government industrial complex up to speed, because they generally have a lot of fear and concerns about what can happen in these markets. But at the same time, as you say, the ability to bring transparent pricing is something that should benefit everybody. I'm also intrigued at something you said, which is, you just mentioned the fact that, if I understood correctly, you're saying Zambia had the opportunity to grow a lot more commodities. That's something you don't tend to hear a lot of from, say, Europe or the USA. People sort of have this viewpoint that, oh my goodness, we've got no more land left to grow anything apart from effectively raiding more rainforest or something.
Yeah, so really that is, I think, where a huge opportunity lies for Southern Africa, but mindful of climate change and really the restricted rainfall in from seasons to seasons. But Zambia has done amazing. If you look at their soybean story, similar to South Africa, where we had soybean production of 120,000 tons. This year, it's well over 2.5 million tons of soybeans for South Africa. If you look at the Zambian situation, where soybean production also started out at less than 100,000 tons, this year they're closer to 800,000 ton mark, where it is a great surplus to have, but also presents those landlocked countries with a challenge of how do they then start to be able to move that product across border, and ultimately try and get some of the deep sea markets, deep sea exports. But I know also in Nigeria and the efforts of the AFEX, the African exchange that is up and running, AFEX really is striving to try and build a better ecosystem. Not necessarily wanting to do derivatives today, certainly on the roadmap, but they're looking at finding a way that gets the ecosystem funded. So trying to get farmers with more cost-effective inputs to produce more product and ultimately hopefully make Nigeria self-sufficient, but also be able to provide export. I think, if you look at that production base coming out of South America and how they've been able to increase their production should any of the African countries need to look at that and say, how do you achieve that huge production net? Certainly the land is there, and you don't need to go and harvest any of the forest just to be able to access that.
That's fascinating altogether, and an interesting corollary following on from we had a very, very interesting discussion about base metals and actually rare earths just a few months ago, and we were talking about how the whole concept that commodities are in deeply rare supply is in fact somewhat of a convoluted economic myth, but fascinating to hear those statistics about how much you're growing. And also, of course, then we always arrive at the same logistical problem. I suppose the thing I always think of is the Egyptian tomato quandary, because 50% of their tomatoes can't get to market and therefore end up being wasted. And that's in a country which has got a huge coastal area, as well as managing to have a huge and vast inland. So, Chris, I mean, looking at these markets around, you've built a number of new markets recently. There have been a number of initiatives to build a Pan-African commodity exchange. Various of them come and gone over time. It seems to me AFEX, the one you've just mentioned out of Nigeria, they're the ones moving the closest towards trying to build that for the time being. What do you think? I mean, is a Pan-African exchange on the cards, or is it more likely we're going to see more regionals opening up in the meantime?
I think, just because we've been around the block on the Pan-African Exchange Initiative, it really is tough to bring all those countries together, and particularly, over the line, because if you look at Bourse Africa Initiative, where they were trying to roll out a African derivatives hub, it is really tough to coordinate so many different countries to get to that single vision. My view is I would see certainly more of regional play. Whereas, East Africa, West Africa, Southern Africa, where you can also have more concentrated pool of liquidity. It's as anyone in the markets we interact with, is the cost of connectivity and setting up to the markets is an onerous one, and therefore, as centers of product, we need to really try and find how we create and improve the liquidity and make it as easy as possible to access those markets. So I would certainly see regional connectivity being perhaps more successful. I think AFEX are really their strategy at rolling out into Kenya. They have also looked at Ghana and Cote d'Ivoire. They also have mentioned Zambia. It's really a great way of also looking at their approaches. They're very much the trader on the other side of the transaction. So it's not that they're running an order book, but rather saying, okay, how do we connect the ultimate buyers looking for the product with the producers? And so they're really acting as traders in that network, but at the same time hoping to bring more transparency to the marketplace. So I think the Pan-African exchange idea is a tough one. Deep pockets, you need lots and lots of cash, and still the probability of success is tough.
But meanwhile, you are optimistic because there seem to have been a number of new markets growing just out of Africa in the course of the last few years. It strikes me certainly that there's an opportunity for many more niche markets to be built.
Definitely, and again, the passion around is the value of what a derivative market brings to the ecosystem. Those abilities to manage price risk, the fact that you really unlock the risk and bring cheaper financing to the marketplace. And so that's where I'm really excited, is finding where there's surplus commodity produced and being able to say, how do we able those markets, those ecosystems to be able to access derivative markets? Does it mean rebuilding a clearinghouse from scratch, or can't you find any of the other existing clearinghouses to really have the risk appetite to take on a Zambian soybean position and be comfortable with storage facilities in Zambia, be comfortable with a specific delivery network in Nigeria to be able to launch a derivative contract there. Because we all know the real value that these derivative instruments bring to every stakeholder in the ecosystem. And so, yeah, I think that's where I'm super optimistic. I can't say that I think that a new entity from scratch with a significant amount of funding is immediately going to lead to success, but rather start looking where there's surplus production, where a market is looking for a way to hedge that price and be able to find a solution to where to move the product to next.
Very interesting. So many of the same issues that you have the world over in terms of the cost of build, the cost of design, etc., and then for the redundancy, how much extra that you need to bear in mind. I suppose that brings us elegantly to a segment right now, because as you may know, ladies and gentlemen, we've been developing a book of the week in recent weeks, and I'm delighted to say that our third book of the week is from recent IPO-VID guest Bob Pisani. Shut Up and Keep Talking is a unique guide to not merely his journey, where he started as real estate correspondent for CNBC, but has now had a generation on the floor of the New York Stock Exchange as CNBC's point man there. It talks about all the incredible people he's met, from the greats and the goods of American politics, American sports, Jack Ma, the great entrepreneur founder of Alibaba, and many, many more, as well as including a lot of their life lessons, investment lessons, and just generally advice about what goes on in the business of financial markets from day to day, from which retail investors can profit, and indeed all of us can enjoy the many exciting and interesting stories that Bob weaves. If you want to hear more about that, don't forget you can catch up with our IPO-VID with Bob on it. It is available wherever you're watching this video. Just look for IPO-VID and Google Bob Pisani and you should find it without a problem. That's our third book of the week. Shut Up and Keep Talking. Highly recommended, available from bookstores the world over. Now, back to our discussion. I'm sorry, I have got an FOB puppy here. You're talking about a surplus of commodities. We have puppies, FOB, right at the moment, if anybody wants to take delivery thereof. It's very interesting when you look at the whole world of commodities then. What do you see as being the differences right now in, say, the state of commodities exchanges rest of the world with the state of commodity exchanges and commodities markets in Africa, Chris?
Yeah, so I think commodity markets are globally connected, and that's the fun part about it. Yes, there are opportunities where there's mismatched on pricing, and that again creates the trading opportunity. I think if you look at the crisis in terms of the wheat markets and being able to access Ukrainian wheat and how that has influenced global wheat market prices, that filtered through. Doesn't matter where you were in the world. And when will that corridor for exports be extended or not extended? That volatility and uncertainty certainly also adds more dynamic nature to markets. And as I said, it doesn't matter if it's Africa or anywhere in the world. So in that sense, markets certainly are connected. But I think, again, if you look at African markets, I think the big ultimate objective it starts with government and the policymakers is how do we strive to create more surplus and not just look to donors for support, but find ourselves becoming more global surplus producers, and where Africa also becomes more of a larger player, being able to supply those hungry nations looking for more commodity. I think it does also bring in, as we spoke about early on, the logistics issue, and obviously if the logistics infrastructure is not as efficient, that cost to entering the global export market is made more and more tricky. But ultimately, that I think is the opportunity for Africa, is finding those transport corridors, investing in that, and then finding the rest of the value chain to be able to produce enough product to be able to supply them. I think on a recent consulting opportunity in Jordan, again, looking at the quantity of wheat and barley that Jordan acquires in terms of their food security strategies. And, is there any other ways of connecting those markets, not only to Black Sea origin wheat, but to other destinations? And maybe that's also an opportunity for Africa to step up. Obviously, from a logistics point of view, Southern Africa is going to be a more of an expensive destination. But I think it does start to beg the question is where there are food security strategies, perhaps there's an opportunity for a country to rather partner with a player on another set of countries, another jurisdiction where there's less political risk, but gives them supply risk. And so maybe that's a government-to-government type of transaction, but that might be able to create the ecosystem and the environment for that country that maybe never produced wheat, had the best climate for it, but didn't actually think about it. And now you've got someone who's interested to produce wheat for them.
It's very, very interesting, isn't it, to hear all of these great opportunities that are around the world and the excitement there is, and therefore how there are the possibility for markets behind it. One thing that I do have to just go back to is, I mean, one issue I see in South Africa in particular, or in Africa, in Southern Africa, in all of Africa, is the plethora of currencies and the fact that most of them aren't exactly either super liquid or even fully convertible. And that obviously does cause a big problem for cross-border trade, does it not?
Yeah, it certainly. Also, yeah, look, in commodity space, most will be benchmarked off USD, but its access to the foreign currency is often also a challenge for market players trading in these countries. So that does hamper the flow of cross-border trade. And I think, as a continent, there's been a lot around free trade agreements trying to encourage that as Africans, we trade more and more with ourselves and find better trading partners. But and again, I guess I was reading again today, do we look to creating a African single currency to really stimulate and make it easier for the flow of currency? Again, perhaps the politics to achieve that is a tricky one, and perhaps the solution is start to look at the regional side. Is there a currency for southern, eastern, western kind of approach, just to make it more standardized? Or really the big countries where you do have those existing trading relationships, try and see how can you get to a single currency for those transactions. But exactly that remains a problem. Discourages many new entrants considering Africa as a point. But ultimately, I think it's the responsibility of us who in Africa living that every day is how do we market the commodities that we've got and be able to give you access to those products.
So does that raise an investment opportunity for the rest of the world, whether it's in the base agriculture, whether it's in the logistics, or whether it's in the delivery of exchanges and related infrastructure?
Yeah, I think the investment opportunities is definitely there. Would I be a full supporter of investment only to exchange? It's the ecosystem. I think, ultimately the exchanges will find a way to survive as long as we know there's commodity that we can trade. The regulations that enable the trading of the commodities there, which means remove the government interventions where borders are closed from time to time. Give the market consistent policy around trading, and the opportunity really then is investing in that ecosystem. It's the storage, it's the better planting varieties, it's the mining rights and access to efficient mining processes. Get that right, and the exchanges, in my view, will find the funding themselves to be more sustainable.
Very interesting. I'm just curious because, of course, as you may know, ladies and gentlemen, we are celebrating the 10th anniversary of Exchange Invest this year. The process kicked off the last couple of weeks. It's actually 10 years and a month or so ago that we originally sent out the beta editions of Exchange Invest to a small closed user group. And then we debuted on May the 15th or thereabouts in 2013. Talking to our community, it's been a joy recently. We had a great conversation with our first subscriber, Robert Barnes, one of many who've been our over 100 guests on IPO-VID. But in response to our 10th anniversary, not only did Dr. Robert, who has recently, I noticed, been given an honorary fellowship of the Chartered ISI, the Institute of Securities and Investments, the highest accolade they can offer to any person, and congratulations, and richly deserved it is to Robert. But Robert found the time to send us some lovely greetings and congratulations on our 10th anniversary, and as the first of what I hope may be a series of videos that we'll run in IPO-VID over the course of the next year, here is Dr. Robert Barnes, former CEO of Turquoise, former CEO of UBS MTF, and much, much more, honorary fellow of the CISI, talking about the 10th anniversary of Exchange Invest.
Congratulations, Patrick Young from subscriber number 1.
I don't know where Robert managed to get that footage from the last Exchange Invest garden party. I thought we'd always told people not to use their mobile phones. But thank you very, very much, Robert Barnes. I really, really love that. You absolutely put joy into the hearts of everybody in the office. We're delighted we could share it with you. If you'd like to share us some comments about the 10th anniversary of Exchange Invest, hit us up on social media, email us, send us something. We'll be happy to include it in a future show, ladies and gentlemen. Chris, I'm here talking to Chris Sturgess. Apologies, ladies and gentlemen, we are recorded today due to various logistical issues, not least of which being my not being terribly well for a course of a few days. We're talking about the AFM, Africa and commodities. I think we've had a reasonable discussion about commodities, good discussion about Africa, but there's always so much more we could talk about. Let's move to the AFM, the Association of Futures Markets. You're in Budapest. I wish I were there. I genuinely do wish I were there. I'm so disappointed not to have made the show this year. How do you feel about the AFM, the Association of Futures Markets, at 25?
Yeah, Patrick, I think, as you're just reflecting on Exchange Invest in 10 years, I think for Association of Futures Markets, from those humble days of starting out with the idea of how do we get emerging exchanges around the table to talk freely around what's working and what's not working, and how do you kind of overcome those challenges? And I think that was the initial vision from those founders of AFM. And yeah, so today, this year, 25 years on, I think as an association, as you mentioned, I was very privileged to be able to chair for 5 years. I think, although it hasn't focused on a significant membership basis, it's really built on those existing members and cementing the relationships that we have with those markets and those members. And so I think AFM, again, is always an opportunity where conversations are frank and very, very open in saying what's worked, what hasn't worked. And I think that's, joining you've joined a number of these sessions in the past, and we're really glad that you're also a member of AFM, Patrick. And I think it's really very much a family kind of initiative. Not to say that as family, everyone is always welcome and newcomers join. And this year we're certainly seeing new faces join the event in Budapest. It's good that I think you feel safe in an environment where you can ask those questions. How do you overcome that? And so you think of participants in the past from Cote d'Ivoire, as they look to build their own commodity businesses and structures, being able to lean on AFM and its members to try and address some of the concerns they've got. I think of questions where they come from Pakistan Mercantile Exchange. This particular nuance of a question of an issue in their country, how have other countries dealt with it? So really, it's a great family kind of orientation where you ask the questions, let's see how we overcome them, and how do we also look to where markets, these emerging markets, could evolve to. That said, certainly we also have seen the support of many of the global big exchanges like CME that have always been there to attend these functions and support us. I think personally back to the JSE being able to list a Rand cash settled Chicago corn contract and what that meant for South Africans being able to trade their local price versus the global benchmark. And that contract still works today. It is fantastic for both local and global participants who want to arbitrage between a South African benchmark and the global benchmark for both white and yellow corn. And that initial really came out of interactions at AFM events where the JSE had an opportunity to interact with CME.
It's really incredible. I mean, you mentioned the family angle and the fact that, yes, of course, like all families, I mean, 95+% of everything is all wonderful, but there's occasionally a bit of bickering breaks out in the kitchen every so often. It's been an incredible family experience, the intimacy of AFM events. We had Paul Constantino and Pat Kenny on just last week. And I mean, they were talking about how the whole layout is different, people sitting in the round, etc. And certainly it's going to be incredible to see all of the markets this week that are attending that didn't even really exist when AFM first took place. And I don't mean just those particular entities. I mean, whole markets that didn't exist. I mean, electricity and power markets that were effectively something people were dreaming about, and they were more at the PowerPoint stage than they were the physically traded stage by the time this was set up in 1998. They were just getting there across some states of the USA, Australia, and other places. Do you look how huge a business that has become, particularly in Central Eastern Europe where you are today? And that gives me great cause for hope. And I'm a super optimist. I'm a super optimist about the exchange model. I'm a super optimist about the possibilities for the AFM, even though tragically I can't be with you this week. What are your views towards the future? Where do you think the next 25 years can be for the AFM?
So Patrick, I think, again, you find that there's always personalities behind various associations. I think if you look going forward to the next 25, will there be a doubling in the number of members? I think the membership base, whoever is there after this, will be a new set of entrants. As you say, there's always new markets, and perhaps there'll be a mix of some new players in the carbon space, where there'll be new entrants of carbon markets that will be members of AFM. But ultimately, I think that ethos, that environment where, yes, you're a happy family and sometimes you have your issues in the kitchen, if that can be maintained and managed, it'd be great. We've seen over the years a number of associations haven't been able to keep going as the numbers have dwindled. I think, again, it's just that environment where you're able to meet up, ask the questions, and you see value in these interactions and that networking. There's definitely a number of other global events that we attend where you can see the networking is phenomenal, and there's just a different takeaway from each and every opportunity out there.
Yes, there's a different opportunity at all sorts of different levels, and certainly none, it strikes me, is so good at dealing with the core nitty-gritty of the exchange business, where a lot of others actually seem to me to have other associations have almost lost sight of what the exchanges are doing in the first place. So high in the sky, pie in the sky, some might say, have become their ambitions lofty as they are. It's a very, very practical organization, AFM, and that's really the dialogue that I think we all missed so much during COVID. And therefore, it's so good to see that the event is coming back. Now, looking forward, you talk about, the expansion of membership of AFM and so on. Do you see that coming from all continents, or will it be focused on particular areas, do you think?
I think, again, it's open to any continents, but where that scope is it's Asia and Africa. And I'm hoping we had a number of delegates from South America at one stage. Perhaps those will also come back. I think the developed markets of the US, we have seen new membership come from that, but it's the different markets. Many of those are also some of the tech firms that are joining. So yeah, at the end of the day, it's not going to be only continent driven. I think it's just some entity that resonates with the type of conversations that take place at AFM. So yeah, I think always open to new participants who just want to share the same kind of ethos.
I think that's a fantastic message on which we can manage to conclude the discussion of the AFM per se. I mean, it's a great organization. I thoroughly recommend that anybody out there, if you happen to have a commodity exchange, futures exchange, small exchange of any kind, you should certainly be considering membership of the AFM, even if you're not going to be in Budapest this week. They have got some great meetings upcoming in the course of the next year and beyond. So Chris, I mean, your period as chairman, what were the particular highlights for you?
Yeah, so running during what was it? I think 2013 to 2018. It was a stage where certainly we were picking up new member firms from South America, but the highlights again, I think, is we were able to just keep building on our marketplaces. So the members that are there, the exchanges that are up and running, have continued, and yes. I guess for political reasons, we did lose one or two, which was out again with the conflict between Russia and Ukraine. But during that time, it was just looking at how the exchanges, and particularly the commodities, I'm always biased on those, could see how their numbers were going. They were overcoming their challenges. One that has always been close to the AFM and followed very closely is the situation with the agricultural commodity exchange in Malawi, which really has been going since 2007, in a sense, if I got the date right, trying to build that ecosystem and moving from a point where they realized that to be able to bring the central order book for a pure spot market didn't make sense, and evolving that to where they act now really as secure collateral managers, and behind the collateral management, really encouraging the banks to get involved and offer financing of commodities. I think in many of the more sophisticated markets, we take for granted that the banks are always there and they're always very keen to assist with financing. But a number of these other markets, it is a real struggle just to get those banks to have the right risk appetite to participate. And so being close to the Malawi journey and to see how Christian and his team have really worked hard to be able to get that ecosystem up and running, where they've also considered using OTC options, chatting to the global option players out there who offer those type of products, just to be able to get the banks involved. I think this whole element of accessing to providing more access to finance really unlocks a lot of the challenges that African players have, be it the farmers, be it the traders trying to just fund these transactions and being able to buy the product and market it at a later stage. So that certainly has been great, and obviously during that tenure, I think Christy has our secretariat. She is phenomenal, who've always been there from the start. Christy is just a magic person who's so passionate about the association. Often you think of key woman dependency. I think the association has a real treasure in her that we never should ever take for granted. Great that she keeps the family together, and keeps on building on that. So yeah, I think working with the team, the AFM board members are very much also across the different sectors, and so it's always great to engage with them.
That's a brilliant one altogether. And certainly I think we're all sending lots and lots of love to Christy Kasha. She's been the indefatigable secretary of the AFM, as you say, since the very start, operating out of Budapest. And it's been incredible to watch the association grow with her and see her journey over the course of that time. And indeed, gosh, we've watched everybody's kids grow up at the same time, Christie's included. What an incredible milestone that has been. So fascinating to go through all of those opportunities that you mentioned for the AFM, the possibilities of where it can go next, which leaves me super optimistic. And I suppose, therefore, I mean, Chris, we've been talking now about the AFM, Africa and Commodities, for the better part of an hour. It seems appropriate to ask you that important question. Chris Sturgess, where do you think the capital market revolution goes next?
Yeah, I guess the answer is, and it's very predictable from where I'm coming from. It has to go to Africa, I declare upfront a bias on that. But I think really it's just finding, and you can see from certain governments where there are changes happening in that underlying government sector, where there is an openness to really move to more consistent policies. And I think that really unlocks so many opportunities for investment into Africa. Now, if you look at that, similar situations in Asian countries as well, where there hasn't been as a consistent policy that will really support the environment exists. And so, but again, where my closeness and my passion lies is just trying to find. And it won't be all African countries on the continent. We know there's many of those, but it's going to be a select, and it's going to be driven by those governments who can step back and say, we're going to do something that's right for the ecosystem. Often there's the challenge around how much really moves as something across an envelope, and that corruption component needs to stop and really focus on just building a more secure and efficient ecosystem that allows the private sector, gives them that confidence to be able to invest and really go and produce commodities.
On that note, ladies and gentlemen, that's the show for today. That super optimistic message from Africa. Let's face it, if we can only manage to get a small chunk of Africa to come together and really boost their commodities markets, that's going to feed hundreds of millions of other people around the world. And it's also going to have an appreciable impact on 500,000, maybe 1 billion people across Africa without any great difficulty. There's a huge prosperity benefit for everybody. Christopher Sturgess, it's been absolutely a joy to chat to you today about the AFM, Africa and Commodities. We wish you all the very, very best. We wish you a fantastic conference in Budapest for the AFM 25. I hope Christy has a very relaxing couple of days and you don't cause her any great problems over the course of time. My name is Patrick L. Young. I just want to let you know that we will, of course, be back next week. We're looking forward to another exciting show there. And I want to say thank you very much to my production team today, to Marianne, Natalie, and Rushelin. This is Patrick L. Young saying, unfortunately, I'm sorry I can't be with you in Budapest this week. It's going to be an epic 25th anniversary. Cheers to the anniversary and great quarter-century milestone of the AFM. I look forward to seeing you back here next week for the next show in the series of IPO-VID. My name is Patrick L. Young. Thank you very, very much to our guest, Chris Sturgess. Have a great week in life, markets, and if you're so DeFi inclined, possibly blockchain.